I am Dr.G.Anandhi, Department of Commerce and Economic. I am handling the subject investment management. Now I discuss about one new issue market. New issue market means is related to on your security. Security means is in your another meaning of some share. What do you mean by share? Authorized capital divided into small units is called on your shares. So security shares is divided into two. One is on your primary market and the another one is on your secondary market. Primary market is called on your new issue market. Secondary market is called on your market is a market or a stock exchange of this exchange of shares and debentures. That is called on your secondary market. Primary market is in the first time of selling the shares and debenture into the market. Secondary market is an already exiting of the company issued the shares and debenture to the market. So primary market or new issue market. Primary market is the part of the capital market where issue of new security take places. The issuer may be new company or maybe existing company. The issue may be new types of the security used in the past. So primary market is one of the capital is in your first time introduced into the market. That is called a primary market shares. So what's the role of the primary market? One is a capital formation. It's provide an attractive issue to the potential investor, and which is the company can raise the capital at their lowest cost, collect from the money from on your public. Public that your public give a money to give on your one the certificate that is called on your share certificate. So collect the small amount to collect the small amount to introduce invest to on your another company. That is called on your capital formation. Liquidity as the security issued in the primary market can be immediately sold in the secondary market. The rate of the liquidity is higher. So I have to buy any one shares to the company, and today I have to buy an 10 rupees, and the next day the share market will rise for the 12 rupees. Immediately sold to the shares into the market. There is a secondary market sold to the easily to sold to the market. Diversification. Many financial intermediaries involve the primary market. Therefore, there is a less risk. There is a failure in the investment as the company does not depend on this single investor. So that is not any one company and it's not investor. So many investors apply to on their shares to the particular company. The application company have collected the application and selected the application and rejected the applications. Who are the selected application? I allocate the equal to on your shares to the investor. That is called on your diversification. Reduction in cost. Prospects contain all the details about the securities are given to the investor. Reducing the cost is in searching and assessing the individual securities. Is a reduction of on a cost means I encourage to on employee also same company's employee also to motivate to buy the shares. That is called on ESO, employee stock option plans. So they have to reduce the cost. The employee motivate to buy and shares in the same company. There is a reduction in the cost. Then functions of primary market origination. It refers to the work of investigation, analysis, and processing of new project proposal. Therefore, origination is the origin of new issues. That is, and your primary market is and origination is first time the investor sell to the shares into the market. That is called a primary market. That is a new issue market. So origination is an origin is a history is a newly invented to the market. Underwriting is the agreement between the underwriter and the issuer, whereby the underwriter promises to subscribe to a specific number of security in the event of public not subscribe to it. So some subscribe applied on an application. I allowed company allotted to some shares to on investor. For the time now the investor not subscribe for the shares the company undertake for the company. That is called underwriting. Then distribution. Distribution is the sale of security to the ultimate investor. First I give on notice to on the investor to the public. Public is the number of shares to the public, the number of how many shares into the company issue invite from on your public, collect the implications and selected for on your firm, they selected the applications and allotted the shares and rejected the shares, rejected application form, I return to that money. So the reason distribution to on your ultimate investors. So equally shares are equally distributed to on your applying and the investors. Then the players in the new issue market register to the issue. Registers of the important category of intermediate who undertake all the activities connected with the new issue management. So all the connected activity means within the 3 month allotted the shares who apply the shares into the company, they allow so equal number of shares distributed to all the investors. They receive the shares application from various collection centers. They recommended the basis of allotment in a consultation with the regional stock exchanges. They arrange for a dispatching of shares. The reason, yeah, these are the procedure followed by a new issue market. They hand over the details of the share allocation and the later register to the companies. Usually, the register to issue the retained record at least for a period of 6 months from the last date of dispatch of the letters allotment to enable the investor to approach the register of the complaint. So, I collect the investor, I have to maintain a records. When will I collect a new application from the investor or many shares allotted to the investor, I have to maintain a ledger. Is a maintained for only first 6 months. It's 6 months of one last dispatch. So, yeah, who are the eligible of one investor? Who are how many shares are eligible to allotted to the investor to allocate to a investor? So, all the procedure followed by a step by step how to maintain a ledger, maintain a new one book. I give one year certificate to one investor. How many was the shares rate? How many of a number of shares by buying on a investor? I have to write down the name, company name, company sale director signs, and how many of a total number of shares and was the shares value for that time of issue market. Total number of shares value, you have to produce on your certificate form. There is a place of a issue market. So underwriter means some investors subscribe to the shares into the company, but didn't buy for the 10-year shares. So that the time that shares is undertaken by a company the company board of directors. That is called an underwriter. The person who they on offer, the person who assure is called an underwriter. So what are the duties of underwriter? They stand as the back of supporters. So investor is one of the backbone of the company because you have to invest the money to a company, collect the money, a small amount of money to is collected a small amount. I have to do large amount of invested in the development of the industry. So the reason back of the underwriter is the back of the supporters. They provide an insurance against the possibility of inadequate subscription. The either maybe a bankers or tries maybe a brokers approve the investment company. Some brokers also help to the companies through canvassing the shares. This company is a very familiar is a share value is increasing in your future. So canvas to one investor. So broker also help to the increasing of an investment amount, the charging and commission for underwriting from the issuing company who give on a shares that the company, some share or brokers convince the investor he has to assure for that and buying a particular number of shares. The company allocated some percentage of commission to an underwriter. So there is one of the players in the new market. Then bankers to the issue. So they are the responsible for collecting the application money along with the application form. The banker to the issue general charges commission beside the brokerage if any. So collect the application, collect the money from on your banker's duty, and also these processing to give on some commission collect from on your investor from a banker charges. As specified by a central cover, there are number of collection center and the banker to the issue should have a branches in these and a collection of one consent. So a banker also issue the shares to the public in a nowadays. Isn't it shares are called from one investor? Isn't one so investor expectation is one familiar company that also day by day increasing the share market value. This is one of the expectation of one investor. Any one investor, if we have invested at enterprise, I make on your profit for that investing money. So the bankers also nowadays, all the bankers also invite from an investor to invest the money to on your shares and gold bonds. So these are the bankers of on your new issue market. Then advertising agent. Advertising play a key role in promoting a public issue. The agency is given a responsibility to the issue of the suitable media. The media include newspaper, magazine, boring, press release. Any one company issue the shares to the public. First, you have to give on notice to a magazines or newspaper. Is a particular date, particular time. You have to collect the application from an investor. So, particular time you have to collect it. Then allocate to on shares to the investor. Then remaining is rejected within the 14 days, and allotment shares also within the 14 days, allotment to the shares to the investors. The reason advertising agent media also is that helps to on selling the shares to the public. Then in a financial institution, the financial institution generally underwrite the issue and lend them the loans to the companies. Hence, they normally go through the draft prospects, study the proposed program, the public issuers approve them. Financial institution help to the investor because some company developed their money, you don't depend upon authorized capital raise for the time you invite and shares from on your public company, the bank of some private financial institution also help to them, helps to that company raising the loan is an increasing of an amount that the bankers also given a loan to that company. That is a proposal and a prospectus issued to a prospectus. Prospectus means is a company details and board of directors, the company name, how many numbers of investors in the company, what are the profit, what's the development of the company, all the details included in the prospectus. Then placement of the issue, methods of routing new issues. They offer through the prospectus public issue. Under this method, the issued company directly offer to the general public institution a fixed number of shares stated a price through the document is called on your prospectus. The what are the content of on your prospectus means is the name of the company is mentioned in the prospectus, address is mentioned in the prospectus, and the existing proposed activities, what are the duties and the activities, how many of what are the assets value, what is the liability value, everything is mentioned in the prospectus. Location was the location of the company is mentioned in the prospectus. The name of the director, how many of directors, authorized and issued capital to on a public, date of opening and closing of subscription. Anyone, if you have invite from on your public, opening date and closing date is mentioned for on your newspapers and magazines, and the minimum number of subscription, and over subscription is rejected, remaining of one year rejected. Name of the brokers, who are the brokers in a particular company, that their brokers names also mentioned. If we are not, we can't able to directly to meet that any company, brokers also help to the investors. So lead manager register to the issue, the floor price and cap price of the shares, the statement of the company that will apply the stock exchange for a quotation of its shares. Quotation of the shares is a differ from one company to company, because on quotation is an expectation is a minimum cost. Who apply to that minimum cost to the particular period you have to solve for that. There is a quotation. Is all the investor expectation of a minimum in your future is a gain on the shares. Then offer for other sales. The promoter places a share within investment bankers who offer to the public. So promoter, investment of bank, bankers collect the money from on the promoter and distribute investment to on your public who want on your loan to start the industry, start the company. You also company bankers also collect the money to distribute to on your public. Is in a period is 70 days or more than a year. This processing is only within the 70 days. You have to collect the money and distribute it to on your public within the 70 days. Board of the dealer decide the price after analyzing their viability and gestation period, promoters' background and future projections. Board of the dealer says sales and shares at a premium to the public. Share premium. Premium means is more than the face value. Is more than the face value is called the premium. Is when the shares you have to buy in a face value is 10, you have to buy in the next day. Your company is on the top of the market. The time is share value is increased. So more than the face value is called the premium. Private placement, small number of financial intermediaries like Trust of India, mutual fund, the insurance company, merchant banking, subsidiaries of commercial banks purchase the shares and sell them to the investor at a later date of suitable price. So, the private placement also, some intermediaries there. So, canvassing on your public, this company is one of the top on the compare with another company. Is if you have to think about your future of India, because you have to buy and invest in your shares to this company, your expectation in the future. That is in your private placement and not a cost effective. Statutory and non-statutory expenses are avoided. Standard legal is a legal and non-legally I express is an avoided. Time effective structure, flexible, suitable financial intermediaries is there as a access and effective issue. The small size can be accommodated. The small size of one intermediaries and help to the investor to invest the company to motivate to one they develop to the company. Bankers also intermediate between the investor and to the companies. The right issue, according to the section 81 of the Companies Act 1956, if a public company wants to increase substrate capital by allotment of further shares after 2 years from the date of base formation or 1 year from the date of his allotment, whichever is earlier. So, should I offer share the first of its existing shareholder in proportion to the share held by them at the time of offer? That the right issue means is called upon capital from on your public allotment of on your further share within the after 2 years. So, if your company started on a formation is that after 1 year you have to collect, you have to announce the shares to from on your collect from on your investors. That is called on your right issues. So, conditions. The notice should be issued to a specified number of shares issued. So, you have to select the newspaper. Is the media informed to that when will you issue the shares? What was the number of shares issued from public? How many applications are received from public? What the shares of the price in the market? Everything is mentioned in the advertisement. The time given accept should not be less than 15 days. Right to the shareholders as they announce the offer is favorable to others. So, who will give on your offer? First, who will give the first application? Give the preparation to on your application is an order. So, I have to arrange in the order. Who is the first? Who is the next? Arranging the order, and the shares also allocated to on ordering wise. Then intermediate in the new issue market. Several intermediaries carry out the activities and different nature in the new market. Is a merchant bankers. Is a merchant banker is called a lead manager because he is called on collect the shares from on your market to invest to on your investors. Is a that is a intermediate from your bank, that is merchant bank. Developer from your company. Underwriters will make some promise to say and buy the shares to your future. So that is called an underwriter. Underwriter get a commission from one companies. Bankers to the issue. Banker also intermediate, collect the money from an investor, then they are collecting money distributed to only concerned companies. Commission charges so collected from only companies. Register to the issues. And a dependent trustee. Dependent trustee means some persons give on your amount to on your third parties. Is an agreement with on your one bond. That is called an dependent. That is a hunting premium. There is a creditorship. That is called an dependence. Then in your brokers. Brokers is a very familiar of the companies. Is a broker is a canvassing on your investors to highlight of on your companies. Because I am the new investor, I don't know the company for on details. So broker explain about for on your concern the companies what the profit when did and started was the status in the market. It is everything explained for that on your broker. So broker also help to sell the shares. The merchant bankers is the merchant bankers may any person, institution engaged in the balance of issue management, either the arrangement regarding the selling and buying or subscribing security as a manager. Is an advisor, is a rendering advisory very serial relations with an issue management. So the merchant banker is a lead manager, is an encourage of an investor to increasing of an investing money. Is an important of indemnity of an new primary market. Primary market is a new issue market. First time issued the shares to on your public. So has a merchant banker is a helps to on your primary market. And the roles and responsibility of on your merchant banker is a new contractor. Is a contract between a company and to the investor. A investor then a merchant banker. Merchant banker collect the money and invest to on a company. So contract between to on a investor and to the companies and the registration. So who will give on your money? So they register for on your merchant banking and collect the money. Minimum of an underwriting. Not at all the shares not allowed to one single person equally divided or given a proportion to one application number of shares. Then document submissions and disclosure of this and other things. If any documentation, if you already applied the loan or already you have to invest in shares to other companies, you have to collect the information from investors. Then underwriters. Underwriters duty is also important for a new market issue. The reason market is a guarantee of underwriting of underwriter is a guarantee of the marketable security. Underwriting is a mandatory for the public issue. The underwriter appointed by any company, consultation with the managers to the issue. Financial institution, banker, member of stock exchange, investment companies, trustee can act as the underwriter. The merchant banker also act upon an investor unto the company. Merchant banker is an intermediate between an investor to collect the money from one investor and distribute it to one company, consent company. That is the details of merchant banker and also underwriter also give on collect the shares in your future. I have to promise to they do or do not. So but he has to go on commission from on your shares. Underwriter charged on the commission for the service which is known as underwriting commissions. The role and the responsibility of underwriters, that is registration, how many shares are there. First you have the registration and agreement is in a contract between the agreement is within the 6 months they have to sold and buy. That is an agreement and the code of a contract and the compliance the termination of an agreement. Some investor is not satisfied in the investing company. It is a termination. That is not done the cheating of on a company or the profit is not shared to on a investor for that time. Termination of on a agreement. Then bankers to the issue. Bankers also helps to the company. Bankers collect the money from on a investor. You get a commission and you're collecting money issued to one concerned companies. So the bankers' activity is also important to one shareholders. That is and also company and also companies. So he is a merchant bankers, underwriter, bankers also intermediate of one issue market. Then roles and responsibility of banker is called that is who are given the shares of amount got a register. For example, A is investing 50,000 share, number of shares is 5,000. Each shares of value is 10 rupee. You have the registration and give on your one certificate. One of type of this certificate. That is certificate means is an investor name, how many number of shares was the share value for that time purchase, for the time of purchase. And the shareholder and the director signs and company sale, everything is mentioned for that and document. Then a contact and the daily statement, infrastructure to SEBI and the books and records and the code of the conduct, everything is maintained by bankers. And the register to the issue. Register and the trader agent, the two category. Category one, which carrying activities such a register to the issue and also the shares to the transfer of agent. Then category 2 is which carry an activity either of a register, issue of a shares to a transfer agent. There is two agent, the two category. One is an activity for the register under the issue of the debt. Is a debt means third person involved to an investor. Okay. Then register issue to the share transfer to an agent is a secondary. What are the functions of a primary? Is a designing and drafting the format of an application. This is out of an application. So application is the top of the company's name, logo, and name, and who are the, how many number, what are the address, and even everything is designed for on application form. Identify the collections of on application format. Is an idea is the online applications or directly issue to the application or on postal sent to the postal. So many way of collecting the application. Opening collections account with the bank. Some companies is a bank details given to one notice. So I am the investor. I give 5,000 shares at purchasing from one particular company. I have to send to the money to the consent bank and not send to the company. So that intermediary is banker. So the banker collect the money and invest to one company. That is scrutinizing the application form. I collect all the application form. Then you have to, who are the eligible, who are not eligible, I have to categorize for that and application form. Then thereafter, I allocate the shares to one investor. Preparing the allotment register. How many shares are allowed to the each investor. I have to maintain a register. And finalizing the allotment as per is approved by a stock exchange. I have the what are the steps I have to follow? First, collect the application and allocate the applications and collect the money and allocate the shares and register, maintain, and this get the permission from on a stock exchange. And ensuring that the corporate actions of for creating of shares, that area applications of are done is in a pricing, refund of the order. Some rejected application is there and a refund to the investors and a printing register for member. Some commission is collect from on investor, banker charges, collect from on companies. That is the functions of debenture trustee. Who is the debenture? Creditorship is called under debentures. Then the trustees who are they appointed to under safeguard, and the interest of the debenture holder is called under debenture trustee. That is safeguard for under interest of the debentures. Depend who is called under debenture holder is in a creditorship is called under debenture holder. There are appointed before issue of the debenture by a company. No person can act and debentures is a certificate of register has been obtained the SEBI for a purpose. Is the debentures also one of the type of written document? I have given a loan amount to only third person. I have to write the name. For example, I give an amount to only Sham. Sham you get the amount from only 50,000 from the particular date. He has written for only within 3 months with interest. That is I have to write down the bonds. That is the eligibility. The scheduled bank carrying on commercial activities, the public financial institution within the meaning of section 4A of the Companies Act 1956 and the insurance company or the body corporate. These are the eligibility. These are legal format you have to follow to that and dependent trustees. The role and responsibility of the dependents. First, registration. Anyone dependents in the first you have to register, get the permit from the particular companies is a constant in the inspection position, not only easily to invest on a third party. He has to invest and already get a loan from other bank. He has to correctly payment to the installment amount. He is an honesty person. How much of an amount to maintain in the account? All the details they collect from the bankers. Due diligence meeting and the code of conduct and the information to on SEBI. All the details submit to on SEBI. There is any roles and responsibility. Brokers to one issue. Broker is very but bull, beer, and lamb. That these are called on a speculator. Speculator is there is no new enter into the new company enter into the share market. Is in share market. If any one company is approved for that the previous company, the broker is not developed to on a new company. Is a completely throughout to the market. There is a brokers of the duty. Some commission collect from concerned companies. The intermediate or responsible primarily and the sales option to the issue from a prospects are called brokers to the issue. They're providing the vital connections, a link between the prospectus, investor, and to the issue. They assist to the speedy sale by and your public and appointment of your brokers. However, compulsory unless permitted by your stock exchange. If we have sell the shares, you get a permission from one year stock exchange. You have the shares and selling, buying for a particular business during the business hours only. Is a get a permission from permission from one stock exchanges and the registration of one company. How many shares are issued to one company, issued to one public? So all the everything details is then mentioned that stock get a permission from one stock exchanges. So functions of stock exchange. In the seeks the best deal, handling the paid and the paid on commission, test and the registration, requirements, pay and potential. Everything is in your duty of one year seven. These seeks that the best deal is in a kind of connectivity with the connectivity with the investors. Is in what's the commissions in how to pay it is the 100 shares and a particular percentage of commissions get from one companies. And for the time of share value is a premium amount is increased for that time you get a commission from one companies. The financial market, the market is an institution, an arrangement that facilitates the purchase, the sales of goods and services. So financial is a market is an institution. The financial market is a arranged facility exchange of financial instruments. Is it is a place where the people and organization wanting to borrow money brought together with those having surplus funds. And that may be not of a particular physical existence. The reason financial market is one of the tool, is one of the instrument, is an arrangement facilities to exchange of financial instrument. Is it is the place where the people organization wanting to borrow a money brought together with those and surplus funds. Then the role of financial market and economic development, saving mobilization, investment, and entrepreneurship growth, industrial development, national growth. So financial market is a saving mobilization, collect a small amount from one year public and the large amount investment to one year, the investment at one year public also to develop an entrepreneur. Entrepreneurial means who innovative in the market, innovate to the market. That person is called an entrepreneurship. To develop on your industrial development. So collect the money from on your public, I invest on your industry to develop on your industrial development and you develop on your economic growth and also national growth. This is the role of the financial market. So small amount collect from on the company is the motion of the money invested to on your investment to motivate to on your entrepreneurship. So structure of on your financial market. Financial market is divided into one is a capital market, another one is a money market. Capital market is divided into two, one is a primary and secondary market. So capital market is in a long term, money market is in a short term period. Is in a capital market. Capital market is in a market of security. That is in a debt or equity where the business enterprises and governments can raise the long term funds. So market of security is in the capital market is called on long-term funds, the long term of security. The nature of capital market, it has a two segment. One is a deal with a long-term security, another one is a dispersion of business ownership. Is a capital formation, collect the money from one invest. That is a capital formation. Is a creating of a liquidity. Then primary and secondary market is a primary market is a new market. Firstly, in sells the shares to the market. That is a primary market. The primary issue is the security issued by a company directly to the investor. The secondary market investor purchase the security or assets from the investor rather than from the issuing company themselves, such as the BSE and NSE National Stock Exchange or their secondary market. Secondary market is not an investor to issue. The rating is increase of degrees for the time they sell to them. They sell to the shares to the market. Primary market is only selling to the first time. Then players in the primary market, issuer, intermediate, investors and individual investors and the corporate investors. There are three I's. What are the three issues? Intermediate and investor. Issuer means I invite the application from the public is help to on your media. that is in a newspaper, magazine, that is the issue. Intermediary is in a banker and brokers, that is underwriter and those speculator, that is the intermediary. Investor is in a public. So the reason a player of the who's golden players in the primary market, three I's. Three I means one is an issuer, intermediary, and investor. So individual investor and investor is divided into one is an individual investor, another one is a corporate investor. There are two main of the issues, namely corporate of issue both a debt and equity securities, government issue of debt securities. Two main issue of the corporate issue both the debt and equity, and government issue of debt security. Intermediary in primary market. SEBI as a regulator, Stock Exchange Board of India is a regulator. The merchant banker is an elite bankers to the issue and brokers and to the banker, underwriter, dependent trustee, credit rating, depositors, stock exchange, share brokers. These are they called an intermediate from primary market. Merchant bankers. So merchant banker also near one of the intermediate is collect the money from on your public appointment of a register, deal with any applications and the transfer and lifting of the securities, arrangement of an underwriting, brokers, publicity, advertising agent, a printer, and so on. And the register issue is called an inspect of an issue, determining the basis of allotment of security and consultation with the stock exchange. Finalize the person entitled the allotment of security is a letter, refund orders, and certificate related to the document in respect of the issue, the register, the issue, the share market. Bankers also issue means is a collect the money from on your investor to collect the money, get the commission from on your company, collecting money, invest to on your concerned companies. That is the duties of on your bankers. Broker is also intermediate on your intermediate, and the dependent trustee is very important. Appointed dependent companies, they can call upon for on your periodical report from the company, inspection of on your books of accounting, you maintain number of shares and how many of investor invested the money and how much of your shares allocated to that. Everything register of and maintained by any company is a get a permit from a SEBI, credit rating agency. IPO is the professional assessment of credit rating agency. There is a fundamentals of company relation to other listed equity shares in India. It is a mandatory for an issuer company coming with the initial public officer obtain IPO grading from a credit rating agency and disclose the same one of the cover page of a document and application form. That is a credit depositor. Is a national security depositor limited and the depositor services limited. Depositor hold various security like shares and an electronic form. Is a depositor participant. That is an investor open the account with the depositors by your depository participant. Is mandatory for all the listed company to have the security admitted and demonstrate both the depositors. That is a depositor for security depositors limited. Is a demat. What do you mean by demat account? Account whereby the where your shares are stored in the electronic form. That is called a demat. So shares account that is called a demat account. Trading account is a place order buying and selling of the shares. The reason demat accounting that shares value is maintained by an account. The reason demat account, trading account the buying and selling of the shares. When you buy the shares, amount is debited from a trading account and the shares are stored in your demat. You have to deposit the money in your trading. Your shares is debited to on your demat account. So your demat account is shares deposit is called a demat account. Amount deposit account is called a trading account. This is sell the shares means is a demat account is debited to on your trading account. Trading account is due to on your shareholders. That is selling shares to that shares. So when you open your demat account, because you have to know how many number of shares, what's the value of the shares, what's the selling share, you have to know for that detail at a time into your account. So you have to maintain a demat account. Is auto credit shares arising out of bonus, a split consolidation merger IFO, and automatically credited the demat account. If you increase in your shares value, That time your shares value increase automatically the credit of on your the demat account. Lower charges is an you collect the commission from your lower charges is any time you have to buy and selling of on your exchange of on shares. That is in a demat account. That is one of the ATM also because anytime withdrawal are deposited to that and yeah shares value. The quicker security can be transferred to one in instruction immediately. Is the elimination of an risk. The reason easy to invest and get easy to get a return from money from money within the period. That is one of the help for a demat account. Is easily to convince to one shareholders because is nowadays we have electronic transfer is a net transfer. So at a time, all the investors easily to transfer the money to one demat on the trading account. Trading account is a share transfer to make it to one demat account. Stock exchange. Stock exchange provide a platform of trade company. Stock and other security. Yes, stock may be bought or sold once the listed on exchange. Trade on exchange instead of broker who are the members of the exchanges is BSC and NSC, BSC and NSC regulated by a stock exchange. Is a stockbrokers are called a registered representative investment advisor or simply broker is a professional individual who execute buy and sell the orders for stock under the securities through the stock market. There is a stockbrokers. Then in execute sell the order stock security though the some commission collect from one companies at the investor. There is a brokers. Is a SEBI established in 1992. It protect the interest of investors in security and promote the development and the regulate the security market and connected to the incidential thereof. So acted SEBI is a stock exchange board of India is if any one company sell the shares to the public in the permit from a SEBI. He given a permit is a legal format followed by a procedures followed by a company. Notification within the share collecting money and the allotment of the shares within the limited period. Is an instrument. There are two instruments. One is a shares, another one is a deposit. Share is divided into the two types. One is an equity, another one is a preference share. And also, is a subdivision of cumulative and preference shares. There are cumulative, non-cumulative, redeemable, irredeemable, convertible, and non-convertible, participating and non-participating, equity shares are deductible. These are the types of shares. Then the debentures, secured market debenture, unsecured debentures, partially, non-partially, then in zero interest packaging, floating debentures. These are the types of debenture bond. What's the difference between shares and debenture? Share is the proprietor of the company. Is the debenture is called creditors of the company. Is a return in the form of dividend, return in the form of interest. Is the collecting interest is same both of the interest, but shares interest is called a dividend, but the debenture interest is called interest. Appropriation of profit. Shares dividend is distributed out of the profit, charge against some profit. In shares, right to attend the meeting and vote, no rights to attend the meeting to vote. Then in lowest claim amount of the capital, first claim amount of the capital. Next, for the variable preference shareholder, other will get the money back only at the time of liquidations. Like when you liquidated the company, for that time you give on your preference shareholder, they get the money from one company, equity shareholder after the 3 months, 6 months, or get the money from one the companies. So debenture holder can get back the money at the time of redemption. He is immediately retain the money from a debenture is not the time of redemption, but shareholder at the time of liquidation. So he is a proprietor, he is a creditor, he is a collect the money is from on the form of dividend in the form of interest. Is an out of profit. Out of profit is called on a dividend, and also debenture is also out of profit. There is a difference between a share. Warrants is a warrant as in security give the holder the right but not obligation to buy the certain number of security at a certain price before the certain time. One important character of bond is they may often get defensible. Investor hold a share attach the warrant. She can sell the warranty, the shares, the trader, the major. The warranty is in one of the safe of the investor, safeguard of the investors. Then yeah, Indian depository receipt means is a financial instrument demonstrate of Indian rupee in the form of the depository receipt domesticated depository is in a foreign company to arise the funds from a Indian security cover the market, the Standard Chartered, and become global company to the file the issue of Indian depository the receipts in India. And area investing foreign stock should be part of the investor portfolio, not only for the diversity holding. That American depository receipts is issued by a US bank representing specified number of share foreign stock traded to US exchange. Then security premium is more than face value is called security premium. For example, 100 rupees is face value. You have to sell to that shares is 110 rupees called premium. So more than the face value is called premium. Less than the face value is called a discount. This type of procedure of an issue company is an initial public offer, subsequent issue, right issue, bonus issue, private placement, and bought out the deals and the years for employees stock option to employees. In IFO means is an initial of public officer is a privately owned by a public prospective document contain information related to the various aspects. Then there are two fixed price and booking fielding method. The two types is followed by an IFO. Initial public officer is a first sale of sale that is called a new issue market. What are the process of IPO? Appointment of merchant banker, because a merchant banker says that collect the money from one investor to invest on a company. There is an appointment of merchant banker, registration of offer document with the SEBI, and marketing to the issue. There is a processing of IPO, bonus issue. Is a new shares existing shareholder to buy and shares get one bonus to motivating it to the investor. So the shareholder did not pay the money and to the company for receiving the new shares. The consisting of equity shares and the reserve bonus shares can increase the equity capital, decreasing in the reserve. There is a bonus issue, buy and get on free, or 4 shares you have to buy again 1 shares, or 5 shares to get in your 1 shares free. There is a bonus issue. Private placement method, private in a small group of buyers. They issue the broker individual privilege without the issue of prospects is known as a private placement method. Is an issue can be advertised. The company cannot be on issue offered by a private placement and less expensive and security in your few funds. These are the private placement method. Then offer for sale method. Offer for sale method means is a venture funds and private equity funds. Subsequently, the company launch these investors sell the shares to through the issue of document. The procedure is go through the existing, not to the company. There is an offer for a sale. Yes, for employee stock option planning means employee would like to purchasing a shares to a working company shares. There is an employee stock option plan. Is a motivating of a company. He has to less amount to buy and the shares, and in future you have to increasing value to sold to the shares to the public. Then yes, the big guidelines is an credit rating, disclosure, dependent trustee, and redemption, conversation, and listing of shares. The credit rating is a credit rating agency is the same shall be disclosed of a document. Disclosure means is a debt equity ratio, servicing behavior of existing debenture, payment of due interest, and the due date of loans, so debenture certification from a bank. There is a disclosure. Debenture trustee is an appointment. Debenture trustee is a debenture with a maturity of more than 18 months, and the name should be state the offer the document. Debenture trustee is a more than 18 months. That is 1.5 years. Debenture redemption reserve, company has to create a debenture reserve maturity more than the 18 months. Conversation is in more than 36 months cannot be permissible unless conversation made optional with the put and call option. Put and call option means is the shareholders is to collected for a put and call option. Is a listing. SEBI permit a listing of debt instrument before the equity provide rating and not below the minimum rate of equivalent. Advantages of primary market is an avenue of an investment, mobilization of saving, collect from public, and they collect the money from a banker, invest on the companies, get a commission from a company, channelize channelizing the saving to the productive use, the sources of large supply of funds, rapid industrial growth, sources of expansion of technological upgradation. So primary market is one of the new issue market, to new of the shares issued to the market to collect the money from the public and investing to the develop of the company. Disadvantage of one primary market, a possibility of one deceiving investor, no fixed norms of project appraisal, lack of post issue seriousness, delay allotment, and poor mobilization. All the investors not easily to investor to canvassing, and brokers are tell to that, and tell to that but in this company is at the top of the company, this company is highly, so there is sometimes the primary market new shares is not easily to sell to the market. That is a disadvantage of the primary market. Thank you.